Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como and today is the 9th of May. It is Friday. All right, let's get into what is happening in the markets today. Canola had a good day, up 11.20 on on the July to get to 7.12. We have lots to talk about on the November as well with canola. Minneapolis wheat down 7.25 to 593.50. Wheat just had a hard day's night all day today. Kansas down 7.25 to 517.50. Chicago down 7.5 to 521.75. Soybeans are up a little at 6.75 to 1051.75. Corn is up 2.25 to 449.75. The Canadian dollar is still trading under 72 cents now at 71.78. Live cattle up a small amount today at 209.58. Feeder cattle down a little bit at just above $3 a pound. All right. Monday is USDA, and this is the first new crop assessment from the USDA. Now, I think we need to take that with a grain of salt. I think, a lot of weight gets put onto this, but, generally the USDA uses, March seeding intentions as a starting point, and they use trendline yields. And as a result, you tend to get what often looks like bullish expectations bearish expectations, big carryouts, big production, all of that kind of stuff. Coming into this May period. If you remember last year, we started the year at over 2 billion bushels worth of carryout for corn, for example, and that whittled away. Now market is expecting 1.4 billion of carryout. 1.465 I think was the April one last time. So still cuts expected there. However, I think the focus is going to be on new crop. Here's some highlights here from these expectation numbers. Corn's expected to be 15.8 billion bushels of production versus last year's 14.8. Again, here I'm going to turn on my little trusty laser pointer here. That's here, 15.8 billion. That's off a yield of 180.9. Again, last year's final yield was 179.3. We are expecting a pretty big increase in acres, or there was already a pretty big increase in acres priced into this market. So, when you increase corn acres, that generally does tend to pull the yield down because the acres are expanding into areas that necessarily weren't corn areas before. So that tends to put a little bit of a pull on yield, even though the acreage kind of makes up for the production. So this may be the largest production that we see throughout the year. This was similar to last year as well. Soybeans coming in a little lower on production year over year because of the acreage cuts. However, we trendline yields are 52.5. Last year's yield was 50.7. Total winter wheat also expecting to drop as a result of acres. And carryout for wheat expected to be a little bit higher as well. So again, take this all with a grain of salt. I think the market will be paying attention to new crop, but as you'll see in some of these charts, I think a lot of this new crop stuff has been starting to get priced in since the March acreage release. So here's corn, and as you can see, the March acreage numbers were put in here. I've been seeing steep declines here. Yesterday, we saw it push to a low below 450. Today, we closed just below 450 as well. This market still looks relatively weak. And I think the big numbers coming for new crop are part of that problem. We may actually see some positive stuff out of the old crop side of the balance sheet on corn this time around. I think the USDA at some point has to recognize that exports are exceeding original expectations. So we may see some bullish stuff on the old crop balance sheet, but I think the market is pricing in here a lot of the bearish elements of the potential new crop balance sheet. Whether that's fully priced in or not, I guess we will see on Monday at 11 a.m. Central Time when the report is released. Here is soybeans. Soybeans, similar thing, right? after the March acreage intentions, we kind of saw markets rise a little bit. They've been consolidating and coiling up in this area. I think a lot of this also has to do with the trade deal expectations, which are occurring this weekend. We have China and the US meeting this weekend in Switzerland. We had a deal inked with the UK. So at least there's some roadmap as to what can be expected from US trade negotiations. It's the hot air talk is turning into concrete concrete things. I think the market is trading that as a positive overall, but I think there's still a bit of a wild card with China in this negotiation. Um, but that leads me into canola. So we'll talk a little bit here about some of the Canadian context today. Canola had a great day. Did it make a new high? No, but it closed above the previous high, above that 711.60 that we have been watching on this chart for a long time. And so it didn't make a new high, but it closed at the highest level that we've seen in months. So I think this is generally a positive, particularly as we move into the weekend. Generally, particularly when there's a long position in canola, which speculators currently have right now, pretty big one too. Um, you would expect to see some kind of counter trend movement into a Friday as profits are taken and risk is taken off the table. But the fact that we saw July canola move into a kind of a new high territory or new high close territory, I think is positive, at least from a technical perspective. November also had a really good day, making almost a new high. Not necessarily, it bested the high from February. We still have yet to get to this high back from a year ago or so. But again, closed very high in the trading range today. 670.60 is where November closed. I think that's a positive as well. So good stuff from the canola market. Minneapolis wheat's a bit of a different story. It is coming down to test support here. 593 is where we saw it settle today. We have some support here down around 590 or just below, and it punched through there in March. But it's kind of trailing what the rest of the wheat market's doing, particularly the hard wheat market. Here's what Kansas did today: made a new contract low, closed near those lows at 517 and a half today. So we are just kind of seeing the sickness from the hard wheat market, move into Minneapolis, despite the fact that there are some good things in the spring wheat market as far as acreage in the U.S. Weather in Canada here could be getting concerning. We'll get into that in a second. Yeah. Next chart here, July crude oil. We are seeing a bit of a resurgence in crude oil. Good things happening here. We traded above and closed above the 20-day moving average here. It could be a signal that that the increase in production in crude oil is getting priced in and getting put on the table. I think why this is important is it has been kind of putting some pressure on the vegetable oil markets in recent weeks. Soybean oil, palm oil, the vegetable oils that have some exposure to biofuels and things like that have been under pressure as the crude oil market has been declining. So now we are seeing a bit of a reversal on this, at least a temporary one. Can't really call a full reversal on this yet, but maybe some stabilization at least, and that may help out the vegetable oil complex. Also, it's been helping, the crude oil market does sometimes have an effect on the Canadian dollar, but today the Canadian dollar, or over the last couple of days, the Canadian dollar has lost a significant amount of value. As it was trading up near 72 and 3/4 at one point in time this week, it fell and is now trading below 72 at 71.77 at the time I pulled this chart. So it is getting weaker. Generally, that's a good thing for our Canadian commodities because they are generally priced in the world trade on US dollars. So when there's more value in the US dollar than there's in the Canadian dollar, some of that value can sometimes come back to the farm gate. Why is this happening? Well, a lot of it has to do with US dollar strength. The last couple of days, we've seen some good US dollar strength as well. And I think just the trade optimism around the UK deal, the Chinese deal, and just a lowering of tensions in the trade negotiations with the United States has been a positive to the US dollar particularly in the last couple of days. Okay, I'm going to get into some weather charts here for Western Canada, but first, I did want to show. I talk about our premium subscriptions a lot here on Canadian Ag Markets YouTube channel here. This is how we make our money around here is by selling these subscriptions. About to release this weekly report on for our weekly report for the week. Just waiting for Alberta crop conditions to come in. Today's supposed to be the first release of the Alberta the crop conditions report. So just to kind of give you an idea of what we're going to be talking about, we actually go pretty in depth in canola here. We talk about the recent Stats Canada stocks and what that means as far as where we are. Talk about some of the recent export data that's come out about canola oil and canola seed exports and which customers we're sending that to and the implications of that. We talk a little bit about the futures and what happened in the futures market today, which I just mentioned was pretty positive. Talk about the spread here between the July and the November and what that's doing and how that affects the market as well. We talked a little bit about options. We give you some option pricing for risk management. I know as we move towards these highs in the marketplace, there's a lot of hedging going on, particularly I think in the new crop contracts at this point. We do dive into some of the other grains, wheat, barley, oat stocks, things like that StatsCan also issued guidance on, or also issued stocks numbers on this week. Here's the page where I'm waiting for the Alberta crop release. And then we get into weather and some of those implications in Western Canada. So I'll go back now to the weather here. Okay, here is the now this, just to put some context here. This is May 5th. Okay, so we're recording this today on May the 9th. This is soil conditions as of May 5th. When you look at this map, it looks like most of Western Canada is in some form of adequate soil moisture. However, in the last 4 or 5 days, we've seen a lot of really strong winds across much of Western Canada. A lot of drying has been happening. We've had a couple of hot days, at least during the daylight hours. The temperatures have been hot. I think the dry down here has been a little bit more aggressive in the last couple of days than it would have been in, say, the previous 4 or 5 days. Unfortunately, this is the most accurate or the most up-to-date drought model map that we have from Environment Canada. But I would say actually that this map is probably looking a little bit worse today than it would have been on the 5th. And we are hearing a lot of anecdotal cases where, concern about dryness is starting to come in, particularly in Western Canada and even in this area of Alberta here where there's a lot of where it looks like the healthiest soil moisture is. Kind of looking at what precipitation has done since this is April 1st to May 8th. So this is updated up till yesterday. This is what, Environment Canada or Agriculture and Agri-Food Canada call the growing season starting April 1st. This is precipitation, not including the winter precipitation. As you can see, the northern part here and much of Manitoba has been quite dry for the last 4, 5, 6 weeks. So overall, this is also adding to the dryness concerns that are starting to create some concern in the Canadian prairies. We will get some reprieve as far as precipitation, although not a lot. And when we see only an inch or less of potential, it does create there's a much bigger difference between a quarter or 3/4 of an inch getting taken out of the forecast when you're only predicting an inch to begin with, than if if the prediction is a couple of inches and you take 3/4 of an inch out. There's a big difference between that there. So a lot of Western Canada is expecting half an inch to an inch. That these the darker blues here would be closer to half an inch. The lighter blues would be closer to a full inch. As we move into these purple areas in central Alberta and then this big area here in central Manitoba, then we start getting into the 1.5, 2 inch and higher category. So at least this map looks better than it did last week when I reported on this. There is supposed to be some precipitation coming in next week. I think a lot of farmers are hammering in crop this week because of the potential for this rain to disrupt the seeding progress as well. So that's the story, Morning Glory, for this week. Remember to subscribe to our insights. It's only $99 a month. You can cancel any time, and go to CanadianAgMarkets.com/subscribe to subscribe. We will also put that link in the description. All right, that is what we have for you this week. Have a great week. We will see you again next week on USDA Report Day.